Hello! This is the Japanese Economic Review channel. Today, we're diving into the latest official numbers on Japan's service sector, which is, the real engine of the economy. The data for December 2025 is out, so let's break down what it's telling us.
So the big question on everyone's mind is really about the health of the economic recovery. And since the service industry is the largest sector by far, these numbers are a super critical signal. They give us a real glimpse into where things might be headed. And here it is, the headline number. The Tertiary Industry Activity Index actually fell by 0.5% compared to the previous month. Now that might not sound like a huge drop, but it's the direction that really matters. So what's the official take on this?
Well, the ministry's own assessment is pretty nuanced. They're saying, hey, we're still seeing signs of a broader recovery. But they're also pointing out that some areas are, hitting a bit of a roadblock. And this idea of a stall within a larger recovery, that's the key theme we're going to explore today.
Okay, let's get into the specifics. The overall index is sitting at 104.8, but that 0.5% drop is pretty significant, and here's why. It's the second month in a row that it's gone down. And that kind of pattern makes you wonder, right? Is this just a temporary blip, or could it be the start of a cooling trend?
To figure that out, we have to look under the hood. You can't just look at the one big number. The index is really a story of two different economies, you could say. Services for regular people like you and me, and services for businesses.
And what we're seeing is that, both sides took a hit in December. Services geared towards individuals dipped just a tiny bit, down 0.2%, but look at services for businesses. They dropped a much sharper 1.1%. So this weakness definitely wasn't isolated to just one corner of the economy.
This is the official chart from METI, and it really shows the long-term trend. That solid line is the overall index we've been talking about. The dashed line is personal services, and the dotted one is for businesses. You can clearly see that broad recovery over the last 5 years, but you can also see that little dip we're talking about, right there on the far right.
But an index like this is just a big average, right? To get the real story, we've got to dig deeper. Which specific industries were the heavyweights pulling everything down, and were there any trying to pull it back up?
And here they are. It was basically a tug of war. The biggest downward pressure by far came from retail trade. It fell a hefty 2.3%. Living and amusement services also dragged things down. On the other side, the main bright spot was transport and postal activities, but its gain of 0.4% just wasn't enough to offset those big declines.
And when you dig into those broad categories, some of the numbers are, they're pretty staggering. Inside retail, textiles and apparel dropped a massive 8% in a single month. Restaurants and bars fell 3%. And in business services, advertising was down over 7%. These are not small numbers. They point to some pretty significant weakness in very specific areas.
And yeah, if you look at the official table right from the report, you can see it plain as day. Retail trade was the #1 drag on the index this month, no question about it.
Okay, but it's really easy to get lost in one month's data. A single bad month can just be noise, The real question is, how does this little dip fit into the longer-term trend? We need to zoom out.
So let's go back to that 5-year graph. If you just force yourself to look past that recent little dip at the end and take in the whole period since 2021, the overall trajectory is still clearly heading upwards. This really puts the latest numbers into context. It looks a lot more like a stall, not a collapse. But that recovery hasn't been a smooth ride for everyone, especially for those sectors that deal directly with consumers. Just look at the trends for living and amusement and retail. See how jagged and uneven those lines are? It's been a really bumpy, stop-and-start kind of recovery for them.
Now compare that to this chart for the information and communications industry. It's a completely different story, isn't it? It's a much smoother, more consistent climb upwards. This just highlights how uneven this recovery really is. Some sectors are on a stable escalator, while others feel like they're on a volatile roller coaster.
So, if we put all of this together, what's our main takeaway? Well, it's pretty much exactly what the ministry said. Japan's service sector is hitting a definite pause, especially in those consumer-facing areas. But, and this is a big but, it's happening within the bigger picture of a multi-year recovery that is still, for now, the dominant trend.
This leaves us with a really critical question as we head into 2026. Is this consumer stall just a temporary blip, or is it a sign of deeper challenges to come? The answer to that is going to determine the entire path of Japan's economic recovery. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.